You don't need to know everything to win in trading. Hello guys and girls, welcome back to my channel. In today's video, I'm going to explain to you how you can properly identify the directional bias of any market that you're trading. Let it be the currency pairs, let it be the synthetic index pairs, let it be the cryptocurrency, any pair provided that it has candlestick. In knowing this, first of all, you have to know that you must trade using the following time frames. Firstly, we'll be using the monthly time frame, then we'll be using the daily time frame, then we'll be using the 1 hour time frame, then we'll be using the 50-minute time frame simply for entries. Now all these time frames, they each have the specific functions. On the monthly time frame, we will be looking for the overall direction of the market. On the daily time frame, we'll be looking for the daily liquidity areas. On the 1 hour time frame, we'll be looking for the shift of the market structure. And on the 15-minute time frame, we'll be looking for entries alone. Now, after knowing this, you have to understand in trading, we are trading only the two types of trends, either the downtrend or the uptrend. And the downtrend market moves in series of lower lows and lower highs. For the case of an uptrend direction, the market moves in series of higher highs and higher lows. These are the types of movement that we are trading. And on the downtrend movement, after the market breaks the previous low, the market has to retest to that level before playing out. The same case goes for the uptrend direction. If the market breaks the previous zone, it has to retest before playing out. That's how the market moves. Now, after knowing this simple knowledge that we have discussed, we go to the monthly time frame of this pair. For this case is British pound versus US dollars. We can see right here, the market is on the monthly time frame, and on the line graph, we can see the market just closed below this zone to form a new low. Now we know for this case, if the market closes above, then it has to go retest inside the liquidity areas before playing out. So for this case, we are anticipating for the market to come back inside the liquidity areas before actually playing out. This is what we are anticipating, because as you can see, before the market broke this structure, inside it there are liquidity areas, and the market always goes towards areas of liquidity. Now, after having this knowledge to us, we then go to the daily time frame to find areas of liquidity. Now, on the daily time frame, we can see that this market was moving also on a downtrend. And the way that it was moving, we can see right here, we already have a daily shift. What's the shift of the market structure? A shift of the market structure simply means the market that was moving in series of lower lows and lower highs, right now it is shifting from moving in series of lower lows and lower highs to moving in series of higher highs and higher lows. Now, since we already have a shift of the market structure right here on the daily time frame, we mark our zone right here and we mark our low right here. Remember, we are still on the daily time frame. We are just waiting for the market to give us a proper buying opportunity so that we ride this trend to the monthly liquidity area. Yes, you can see the market is coming to our area of liquidity. We are waiting for the market to come right here according to variation B. Yes, you can see the market did already come to this level right here. Now at this point, we mark this zone right here, and then we go to the 1 hour time frame to see if we will get a shift to support our buying decision. Now on the 1 hour time frame, you can see that the market was moving in a downtrend, providing you with series of lower lows and lower highs. I normally like to use the line graph because on the line graph, I can see the market structure more clearer. So we can see our lower low was at this point. That means our lower high was at this point. So if the market closes above this lower high right here, then that will be a confirmed shift of the market structure, because just to be sure, we don't know if this area of liquidity will play out for the long term. Just to be sure, we are waiting for the 1 hour shift. Yes, you can see right here, the market just broke our previous lower high right here. This confirms that this market has already provided us with a shift. And this becomes our new higher low right here. So getting back to our line graph, let us see the proper market structure. You can see the liquidity areas that are within this area, they are in a ranging direction. So we won't trade these liquidity areas, and probably we'll just wait for the next new proper opportunities. Right now, we're just sitting on our hands and we just zoom this market. Alright, you can see the market did just form another high.
A few moments later.
So the market again failed to come to our area of liquidity. You can see it just moved this area right here. Ow. So our new area of liquidity is in this area. You can see the market came to our area of liquidity right here. You can see the market touched with weak rejections right here. So what we do, we enter our trade to this point with our stop loss just below this structure, just to be safe. So you can see the market just closed above this area right here to get our new low. So what to do right for this case, after taking your take profit, you just move your stop loss to break even. Now you can see here the market again broke this area right here. So your stop loss just slightly below this zone. That's how you ride the trend until you get a shift of the market structure on the daily.